So guys, let's talk about the basics of forecasting for business owners planning to exit. The first thing I want to say is just some of the tools that I use to help forecast companies that are just needing a forecast, maybe because the buyer wants it, maybe because it's one of the requirements just within their package, their assembly proof that the M&A advisor maybe wants, whatever situation may be. Some of the tools that I use is either LivePlan, which is a software, or my favorite, which is Fathom. These are great forecasting tools where you connect your accounting system to the software and it helps you forecast. And it helps you basically do just assumptions, just any linear regressions or any formula to help you get a better forecast. And they do go up to 12 to 36 months. So that's just a quick nugget right there for people just looking for forecast tools. Either your CPA can not buy it, but your CPA can get the software for you, so you can so they can use it. Or if you don't have one and you just want to do it internally, you can buy just a single package where you can basically do the software. So that's just that part as far as the tools. Now, some of the reasons that you will want to forecast it is it turns the guesswork into real actual data with assumptions. Buyers love this. Also, bankers love this too, where you're not just making up random assumptions. There's a systematic formula into why revenue is forecasted on maybe a 5% increase every quarter, right? Because each time you put in your drivers is what the software calls it. You have to add your assumptions on the why, right? So it just helps compile all the information. Just makes it easier. So that's something that that's good for the forecasting. It just takes the guesswork out of it. I recommend using those two softwares. Another one is it's actually an indicator on if you should sell the company or not. What if you have a historic history of your revenue or maybe your cost going either up or down in a negative effect? Maybe that's a sign. It's like, I need to wait. I need to increase the value of this company and maybe sell at a later time or exit at a later time based on what your forecasts are saying. Because your forecast, you are pulling the data from your historic numbers. That's why this is so important. That we have some of these softwares that can help us get the job done. So that's another important one. It helps you kind of get a quick indicator on should I sell, should I exit. If I wait 3 months and we do XYZ to increase the value, maybe we can improve the recasted EBITDA to sell at a higher value. These are just things and conversations that you can just think of to maybe, it can be beneficial. But another reason why forecasting is important, it helps you get that indicator, right? That green or red flag on, okay, maybe I should go forward with this exit, or maybe I should wait a little bit. It's a way to really tell. It's like that gaslight signal on your vehicle, on whether you need to get gas or not. Another one is it's the foundation of an exit. It's foundation. When advisors or maybe you're working on your assembly proof so you can start marketing out to buyers, they want to look at how will the cash flow continue to go when I purchase the company. They want to look at that. So when I'm sending or helping people package up their assembly proof or their package where they're marketing out to buyers, that's one of the things that's usually in there. Buyers want to see what forecast in the future are they buying. What cash flow in the future are they buying? So these are just a couple quick forecasting one-on-ones that you can kind of think of for when you're exiting your company. Maybe a forecast is something that you should definitely put in place and look at it from a monthly point of view. I know our company, for our clients who are under the CFO package, we do forecast about 1 or 2 times a month. I tell our team, it's the cornerstone of our company. It's a cornerstone service. Clients can't wait to get on the forecast. I met with a realtor. Here's just a quick story or case study. I met with a popular realtor here in Houston, Texas, and we have his historicals, been doing his books. My realtors are simple books to do. But of course, it's July now. We still need to forecast August, September, October, and so on. He already knew what he was projected to make for each month. We plugged in those numbers, and then from those numbers, we found out, hey, your tax, we definitely need a tax plan. You're about $390 in profit. If these numbers are indeed true, are accurate, we're going to be, owing about 100 and maybe 150,000 in tax liability. Now, for those rest of the time periods, we're only working on tax planning. All this originated from the forecast. That's why clients love the forecasting method. It's a way to kind of forecast what your year is going to be when it comes to your revenue, your real number, which is your recast EBITDA number, and then your tax number, which is what we call net income. It's a way to already forecast that and start making up game plans now before the year's over. So if you're interested in these forecast meetings, or you're interested in exiting your company and you need a CPA to help you do that, please click the link below. We're always happy to assist. Thank you.